In money matters, the JSE was weaker in morning trade, while its global peers were mixed as investors digested the U.S. labor market remaining strong and what this could mean for the Federal Reserve interest rate outlook. Trader and founder of Herenya Capital Advisors, Petri Redelinghuys, joins us now for a wrap of the market. Thank you very much for your time this afternoon, and a happy Monday to you. Is the sentiment reflected on the markets at midday trade?
Good afternoon, and well, unfortunately not. The top 40 index down some 0.8% so far today. Coming into this week, well, we actually come off the back of a relatively strong week. I mean, Friday was a very good day for markets, both locally and internationally. We saw some good job starts, as you mentioned. We also saw essentially the Saudis not playing nice with the oil bears, reiterating that they're going to be doing production cuts and all sorts of other stuff and keep the oil market well managed, if you will. So overall, it's a bit of a mixed bag, really. U.S. markets are yet to open their session for the week, but if we look at them as an indicator, they're mostly flat to unchanged. So our weakness is a little bit of a surprise, to be honest with you. I thought that we would be, doing relatively better today than what we have been faring so far. Yet, most of our international, call them leader markets, haven't yet picked a direction or even opened for the day yet. So it's still the beginning of the week. I mean, if we look overseas to see how the world is doing, Hang Seng Index up almost 0.9% for the day. So that's not too bad, really. China's doing relatively well. So we are a little behind on that in that sense, if you will. We are mostly more closely correlated to the US, which is still unchanged. So unfortunately, that translates into our market being down quite a bit today, almost 0.8%. The rand, however, slightly stronger, 0.4% stronger, trading at 19.40. So no complaints there. Hopefully, we get a bit more strength throughout the course of the week. Expectation for the week is really for us to have a relatively strong risk-on sentiment, coming into this week. However, there is some local data. We saw, for example, PMI data in South Africa not doing too well. So that could be a bit of a source of some of the pressure that we are seeing on our market.
Okay, the May S&P Global South Africa Purchasing Managers Index is out and has fallen slightly to 47.9 index points in May of this year from 49.6 last year. Help us make sense of that data and what this tells us about the state of our economy.
So look, the PMI data under 50 sort of indicates a contracting economy, right? If the data is above 50, it generally means growth. If it's below 50, it generally means a little bit of contraction. So that falling from 49.6 to 47.9 just means that we still have, how do I say this? The rate at which our economy is declining is accelerating, if that makes sense, right? So I guess this is evidence that the load shedding situation, which is now, if you count the number of hours load shed so far this year, it is way more than it has ever been in history thus far. And there is an enormous amount of pressure on small business and the overall economy really to stay afloat. And this is reflected now in the Purchasing Managers Index, the PMI data that came out today, which shows that the rate at which our economy is slowing down is getting faster. So we're slowing down quicker than we were before, which is, quite concerning. And you couple that with, if you look at fund flows last week, we did also see, an acceleration of foreign investors kind of exiting the South African market, selling their South African assets and moving their money elsewhere. Now, we could argue, as the ever optimistic South Africans that we are, is that this is creating an enormous amount of opportunities in South African stocks. There's a couple of reasons that our index has performed really well, while the rest of our market has really been under pressure. And that is mostly because around 17 or 18% of our entire index was concentrated in one share, Richmond, which had benefited from, global luxury goods sales being really good. So two things are starting to happen. Richmond is cooling off a little bit. And two, Richmond's influence of our index, in the rebalancing, is going to be considerably less than it was before, which means that our index probably sort of comes back down to earth a little bit. However, I do think that there is an opportunity for sort of global risk on sentiment to take hold, and markets on a global level to sort of rise. And then in that scenario, our shares do offer an enormous amount of value for longer term investors. So I think that, I hate to say it, but I think that we're nearing that point where the worst is almost over. So it feels as though global sentiment is improving. Locally, things are still almost as pessimistic as they could be, but that in itself is a bit telling that maybe, when everyone else is fearful, it's time for us to be greedy, right? So everybody is hiding under their desks. It's actually the time to stand up and take the opportunities in front of us.
You speak of pessimism in the country. You speak of investors pulling out. Have we been here before as a country in trying to assess just how bad things are, right? And have we made it out of the woods if we've found ourselves in this situation before?
Look, yes, we have found ourselves in this situation before. Although I think it would be naive to say that this time is the same as last time. I think this time it's the worst situation we've been in thus far, to be honest with you. But can we get out of it? Yeah, absolutely. Yeah, I think that we are reaching a point where, we the people are less likely to tolerate the failures that government continue to deliver. And private industry is really stepping up to the plate and solving a lot of the problems, right? So I think that we are reaching a tipping point in that sense. And I think that, if there's any place to start a recovery from, this is a good space to do that from. I also think that, just essentially being actively sort of trading stock markets for a very long time, often betting against the crowd is the right thing to do. It's not always the comfortable thing to do. Often it's the difficult thing to do, but it is very often the correct thing to do, right? And when everybody is kind of really walking around with their heads hanging down, feeling defeated by the circumstance, that's when you really find crazy good opportunities to grow and to make the best of things, right? So I think that yes, there's a lot of pessimism and yes, there's a lot of frustration, but I do think that is a breeding ground for change, number one, and for opportunities for those who are brave enough to take them. So I do think that, yes, we've probably survived this and the rand probably firms up and the market continues to rally and our investments do well for those who are brave enough to make them. Look, there are still an enormous amount of headwinds. If you look at, for example, Tiger Brands, some comments that came out of them, the trading down, that the consumer is in a lot of trouble. And there are definitely difficult times ahead, absolutely. I don't think that we'd be doing our duty as people who have the opportunity to speak to lots of people, on any given day to sort of paint this rosy picture that everything's fine. I think the times are tough and times will probably get a bit tougher still. But these are the times that we're supposed to be using to make investments and to make plans for the future. Because if we don't, things will never improve, number one. And number two, when everybody else is really sort of in the doldrums, put your capitalist hats on for a second and think like a trader, right? Everybody is extremely negative about the future of our country. You and I know that doesn't matter what happens, we're going to be here and we're going to build it and we're going to make it work, right? So in that situation, everybody's selling their stocks. And these stocks go below their fair value, and that's an opportunity for us to buy them, right? And to make a little bit of money over the next 5 to 10 years by
interim results. How did they fare very quickly for us?
So Oceania actually did relatively well, to be honest with you. They had a good set of results. Let me quickly pull them out here. I think that they, if you look at their sort of profitability, revenue grew from 3 billion to 4.5 billion. So that's massive, right? That's a huge improvement. Operating profit grew from 345 million rand to 648 million rand. So that's about 87% higher. Profit before tax also up to 552 million rand compared to last year's 271. So what they're benefiting from, for example, is consumers are needing good sources of protein that are relatively cheaper than red meat, right? And fish is filling that gap for them. So look, there are some cost inflation pressures that they are struggling with and that kind of thing because, they do import some fish for for the canned food stuff, but they also export some fish. So that weak rand is kind of playing in their favor. So they've had a very, very solid set of results, actually, on good volumes being sold in terms of their products, as well as amazing ability to contain costs. I think their operating cost is only up something like 4.1%, while their operating profit is up 87%. So that's, in my view, at least a very solid set of results from Oceania.
The Competition Tribunal has approved Click's acquisition of Sorbet franchises with conditions, of course. Talk through the specs of the deal and the conditions.
Well, okay, so the conditions are pretty much, as far as I understand, run-of-the-mill normal stuff. We can't change the employment status of any of the employees that currently work for Sorbet, so no job cuts, which is generally the big thing when it comes to these types of acquisitions. So that's very, very gracious, or very good that is the case. And then, Clicks already had a 25% stake in Sorbet. They now increased that stake to 100%, so they'll completely own all of Sorbet. And the deal is valued at, 105 million rand, so that's not a bad payday for the founders of Sorbet. I think it's 190 stores in total that they've built up over the years. And for the last 12 years, they've already had we call it a partnership or relationship with Clicks, where some of their products that are locally manufactured are being sold in Clicks stores throughout the country. So there's now a lot of synchronicity that comes in here, where that local production of local products can be scaled up somewhat, and further distribution of their products through the Clicks network can take place. And the two brands, well, at least, from both sides of the equation, from both Sorbet and from Clicks, there's a very strong narrative of the brands work well together. They have a similar sort of value set, promoting health and I suppose, cleanliness or hygiene within South Africa is something that they're both very passionate about, and the deal goes through, right? So it is now, there's no way that Clicks can get out of this deal. As long as they stick to the conditions, which is obviously preserve jobs, then Clicks, Sorbet is now officially a part of Clicks.
Thank you very much, Petri Redelinghuys, trader and founder of Herenya Capital.